So a very quick video to take you through the FCA's focus areas for this year, 2026. And, the FCA are likely to have a really busy year this year. And I think the big hitters are firstly, the introduction of the targeted support regime. So if we're to step back and explain what that is, you go back to June 2025. Back then, the FCA released their findings of the Advice Guidance Boundary Review. And that was a response to the growing concern that most consumers in the UK weren't getting the financial help that they needed. Basically, because firms were unable to provide advice to customers due to not having the relevant regulatory permission. So, for example, a customer might be purchasing a complex financial product. Firms might see that it doesn't really fit the needs of the customers, but felt unable to provide them the advice of that being the case. Instead, simply suggesting to the customer that they seek their own advice. Probably a phrase and situation you've come across quite a lot if that's your area of work. So the review was the next step in years of work from the FCA. And in 2023, they opened a discussion paper on the topic, tackled pension advice in 2024, and are now moving into that targeted support regime. But a long story short, the FCA now have a new regulatory permission called targeted support, which firms will need to add to their authorization, to their FCA authorization, in order to supply it. But what is targeted support? It's essentially group-based recommendations for pensions and investments, and it bridges that gap, as we mentioned before, between advice and helping customers with similar needs without the full cost and complexity of individual financial advice. So it focuses on ready-made solutions for segments like pension drawdown or contribution planning. It's basically that major reform under the Advice Guidance Boundary Review, allowing firms to suggest suitable options for common financial situations, essentially making support more accessible. And it's important because it provides that middle ground between generic guidance and expensive full financial advice, so therefore will have a greater reach for customers. And it also encourages firms to proactively help more people to make better financial choices that'll, in theory, boost confidence in pensions and investments and ultimately get better returns for customers. So that's one of the big hitters for this year. It's keeping the FCA busy. Another is the ongoing motor finance issue. And in this case, it's the redress scheme. So we're probably all very aware of the scheme by now. Just to step back a little bit, what are redress schemes? They're essentially a system under Section 404 of the Financial Services and Markets Act 2000. And they are there to compensate customers who are unfairly treated. And in this case, when taking out regulated car finance, whether that's PCP or AHP, and between the dates of April 2007 and November 2024. And that was largely due to undisclosed discretionary commission arrangements, but also for high commissions as well. This particular scheme aims to provide compensation to customers, including interest for those who lost out. And that will do so by establishing clear rules for firms to identify affected customers, how to assess unfairness, often presumed if it's going to be undisclosed, and to pay redress in an orderly way, covering millions of agreements. Now, there's not a formal decision yet at the time of recording this as to whether the FCA will impose this redress scheme or not, but it is highly likely. If they decide to do so, they'll inform us via a policy statement and final rules. Both are expected early this year, with the scheme opening immediately after publication. And perhaps a clue in terms of the timing can come from the FCA's consultation on extending the complaints time limit, because there's a pause on having to respond to Motor Finance Commission complaints. On the 5th of December 2025, the FCA responded to the consultation, setting a new deadline to respond to complaints as the 31st of May 2026. And essentially, if firms can't respond before the FCA's permission on the redress scheme is clear, so that makes it obvious to us that we're going to get that position before May this year. So that's two major areas. And the third big hitter is another area of regulation that the FCA is going to become responsible for. Now, when they started regulation in 2013, they've had a number of areas added to their remit. In 2014, it was consumer credit. Then after that, they've had claims management companies, funeral plans, cryptocurrencies, etc. But this time, it's the turn of buy now, pay later, which has obviously grown a lot over the last 6 or 7 years. Now, what's happening here is that as of the 15th of July 2026, lenders who offer these agreements to finance the purchase of goods and services from a merchant, they'll come under FCA regulation. Just worth pointing out at this point that it's excluding, or the regulation excludes the brokers involved or the merchant themselves. It's only the buy now, pay later finance provider that has to become regulated. And the current situation is that the FCA consulted until September last year on the rules that providers need to follow. So it's likely to include the need to give information to consumers and undertake creditworthiness assessments. They also consulted on whether the FCA should apply existing rules for regulated activity, regulated credit activity to this sector. And we're currently, at the time of recording, we're currently awaiting the regulator's response, but they are cutting it a little bit fine considering the applications for interim permissions need to be made before the 15th of July this year. So we're going to get the exact rules anytime now, but once we've got the rules, firms obviously need to make sure that they are aligned with those rules, but then they do also need to enter into the temporary permissions regime before regulation day. That, as mentioned, regulation day is the 15th of July 2026. To be able to register, you have to confirm that you're undertaking regulated activity, so issuing buy now, pay later finance. You have to notify the FCA between 2 months and 2 weeks before the 15th and pay the registration fee, and then provide them a number of details around your firm and your senior managers. And then finally, the other big thing for this year, there's many more things going from the FCA's perspective, but I think the other big thing is the expansion of non-financial misconduct rules, which is coming in September this year. So currently, these rules do apply to banks and the banking industry, and it is under SM&CR and the conduct rules. If you have poor conduct, if you breach the conduct rules, lack of integrity, lack of skill, care, diligence, outside of your main job role, if you're in banking, so for example, if you harass an individual or if you bully an individual, that's a lack of integrity, doesn't necessarily need to be alongside your day-to-day job role. You can get disciplined by your organization and punished under the conduct rules. That has obvious consequences for you. When it comes to your references in the future, you can go on your regulatory references. It gets reported to the regulator. And if you're a senior manager, that has to be currently within 7 days, although there's going to be a slight tweak to that with the leads reforms. But the regulator finds out if you're a senior manager and can obviously take action against you. So that currently happens for banks. For everybody else, the non-financial misconduct rules are being expanded to everybody else under the FCA's remit. So if your staff members are being disciplined and for non-financial misconduct like harassment of other individuals, as I mentioned before, or other similar things, then that would count against them in terms of a conduct rule breach and all the consequences for that. So it's a good chance this year to remind your staff of the behaviours expected of themselves and the consequences for failing to meet those standards. Now, if you want help with that, we have a number of e-learning courses, which we're really proud of, because typically compliance e-learning is never the most enjoyable experience and never the funnest or most interactive experience. But we pride ourselves on making the courses hugely interactive, very engaging, and useful. Nothing worse than sitting through a bit of e-learning for half an hour or so and not really having learned anything, if you find it too easy, for example. So ours are robust. Ours aren't easy, and then do teach your staff members the things that we're trying to get across. Now, we've got a number of compliance subjects, everything you'd expect from vulnerable customers, consumer duty, through to the conduct rules. And it's a great time to remind them about the conduct rules, about what constitutes non-financial misconduct. All those examples are packed into our hugely interactive and entertaining e-learning. So if you want to have a look for free, just reach out to me at robert.bell@rbcompliance.co.uk, and I'd happily give you free access to have a little look at that course. Thanks for listening.